We're still gradually ringing the register on our high flyers for the Charitable Trust. You can follow along by joining the ActionAlertsPlus.com club. We're making room to buy them back at lower levels because the next time there's some bad news on the coronavirus, you got to have some cash. Fair warning, I hold monthly calls for the club. I'm doing one this Thursday at 11:30, and the market's gotten clobbered almost every single time while I am holding the call. Quite unnerving. Fourth, we're hearing a ton of chatter about how smaller biotech companies are closing in on either a cure for this disease or a vaccine. In my own homework, I am getting that, but I don't feel certain enough to share it with you yet. If the number of infected remains low here and the disease is slowed down here, it does raise the odds that something worthwhile pans out. The prospects for discovery are much better than they were during previous epidemics because we sequenced the virus's entire genome. I remain hopeful, but I could be wrong. We did get some encouraging news from the FDA this evening that they have an emergency test for the disease, although I thought we already had that, but that's okay. And that the odds of a mass epidemic now seem relatively low. I thought we had that assurance, but that's okay. Fifth, the crux of this worldwide rally is that the coronavirus is manageable, that it can't overwhelm our system. While that's true in the United States, almost every market roared a great deal today. Yet many of these countries are very unlikely to contain the disease. Just because it's manageable for the U.S., that doesn't mean it's manageable for them. That's important. That's what the WHO is worried about. That's why I was surprised to see so many industrials with major China exposure flying today. An awful lot of things need to go right before China can regain that 1% of GDP that I think this disease has lopped off. Maybe some of this was simply short covering, particularly here in the United States, because the CDC's downbeat stance on Friday brought out a ton of short sellers. More on that later. Long story short, we saw a rally in both the deserving and the undeserving. Finally, while the rest of the world's markets roared, I think some of today's strength, well, I think it had to do with President Trump. So you love him or hate him, he's been great for the stock market. Between the Democratic disarray in Iowa, I don't know if you noticed that, I think it was pretty palpable, and the anticipation that their impeachment effort will fail, I think that's pretty empirical. I'm betting our market gets in a boost. Political implications is what we call it. How neutral can you get? Implications. Bottom line, today seemed like a genuine relief rally, meaning it was motivated by a sense of relief that we'll make it through the epidemic intact, or at least in much better shape than we thought a few days ago. But let's not get ahead of ourselves. To me, this is an opportunity to do some portfolio reshuffling.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.